Welcome back to the Unusual Whales YouTube channel. Today I want to break down this tweet that I've had pinned on my profile for a couple of months now. It provides a pretty simple step-by-step guide of things to look at when examining the contract data as seen here. The UI has changed slightly as the platform has gotten updated, but the major elements remain the same. You can access this data on the website in one of two ways. The first way is to select the contract's expiration date on any one of the many feeds across the site. The second way is through the contract lookup page, which we've recently given a huge facelift to. The page remembers any contract you've looked up, and you can sort them by expiration or by ticker name. Before we continue, here's a quick clip from Thursday, June 8th's Power Hour stream.
I got me tripped up. Alright. So now that we're back on track here, now that we're actually looking at what I meant to be looking at here, we have the 265 July 7th. I think July 7th is a popular date. Yeah, so we got the 270 July 7th. Small hit in the morning, which eclipsed open interest. So when you see this little, if I hover over it, you can't see it, but there's that little green flag right here. Right here. So volume has exceeded open interest. So this is kind of right around where if you continue to see volume skewed one way or the other to the ask or the bid, then you can kind of tell that they're opening up trades. So we got the 270 July's, 340 August's, 320 October's. So these are all, let me get rid of some multi-leg volume. Not sure if we're looking at any to begin with. 375 Marches, I think we talked about that. 265 end of month. 250 next week. Jesus. 250 written puts for July, trading at an average of, or filled, excuse me, at an average of 28.24. That is kind of ridiculous. 225s for August. Which premium is that? 1.7 mil premium. So anyways, you guys get the point. There's a lot going on here. Let's take a look at the Tesla 250 strike calls expiring June 16th that we saw in the stream briefly and break it down using the steps in the tweet. While obviously nothing is guaranteed, flow that satisfies the conditions that we're about to go over is definitely flow to keep your eye on. We'll go step by step. 1. More volume than open interest. So the first thing to look at in general, even when not specifically using this view, is volume and open interest. We're looking for there to be more volume than open interest, and the higher the difference, the better. The main reason we're looking for volume being greater than open interest is that it is a precursor to the volume, likely resulting in quote-unquote opening trades, either buy to open or sell to open trades. 2. What's the bid-ask skew? The next thing we want to look at is the overall bid-ask skew for the contract's trading volume. 65% of the volume was taking place at or closer to the ask. Combined with previously establishing that there is significantly more volume than open interest, this could indicate opening call buying. 3. What did the volume look like? The volume was persistent throughout the day, with several instances of very large volume. The very large volume was primarily all at or closer to the ask. The 7 large candles range from $460,000 to $726,000. There is some serious money at work here. What percentage of volume was from multi-leg trades? The total multi-leg volume was 10%, which isn't very high. This lets us know that the vast majority of the volume was from single-leg trades and not complex multi-leg trades. Multi-leg trades aren't necessarily bad to see, they just require a different kind of analysis. One caveat here is that complex trades can be legged into, so single leg activity can still be part of a larger trade. We'll never know for sure whether or not this volume is from a straight call buyer and not some spread buyer or anything else, so we just have to make do with what we have. 5. Notional value. As with many of these values, there isn't a cookie cutter threshold that makes something unusual or not unusual. They're all relative to each other.
I generally like to see trades that are at least 6 figures in size, and in this instance we have 7 candles of mid to high 6-figure premiums. 6. How many total trades? This value is another arbitrary value. It's essentially just a way to put a number on the number of market participants for this contract. Think of it as a numerical gauge of whether or not the activity is from large block trades, which can be less reliable of flow. In this instance, since volume was steady throughout the day, we don't really need to worry about this. 7. Would historical charting help my analysis? Sometimes there is activity on the contract from previous sessions that may be of interest. In this case, the charting isn't much help, but here's an example. There were 3 days in a row of heavy bid side activity into the SNO 140 strike July puts, which we can assume was put writing. There were almost $8 million in premiums collected throughout the 3 days. The contracts were written for more than $1,400 apiece and ended Friday session trading at around $800. So that trade has gone pretty much exactly as planned for that trader, and given that we saw repeated activity over the course of multiple days, that can be a pretty good signal that this trader has some serious conviction. Number 8, always look at the raw data. I posted an in-depth walkthrough on elements of the raw data to look at, using ticker CAT as an example. I'll put a link to that video in the description below. The raw data, which is just another name I give to the options flow data, is very important to look at. Only looking at elements 1 through 7 here can get you into trouble. To wrap this up, here's just a quick debrief on what happened next. So the market was already aware that General Motors CEO Mary Barra and Tesla CEO Elon Musk were planning an EV-related Twitter space in the after hours, but it had not priced in that Tesla would be opening its supercharger network to GM drivers. Tesla had struck a very similar deal with Ford just a few weeks prior. This news resulted in shares of Tesla gapping hard at the open, and these contracts saw a huge increase in value overnight. At this point, there's been so much volume on this contract that we aren't able to determine whether or not the Thursday buyers are still holding their position. The first candle of the day saw a large amount of bid side activity, which could very easily be the Thursday buyers taking at least partial profits of over 200%, from around $225 a contract to over $700. There was quite a lot of other bullish flow from Tesla as seen in the Twitch clip, which had many of these same characteristics that we went over, which only further strengthened the bull case. Tesla bull flow has been extremely strong for the last month, which I've been diligently tracking on Twitter. Congrats to everyone who has been following the flow. Thanks for sticking around to the end of the video. Please make sure to check out our changelog to stay up to date with all of our recent updates.